Hi there and welcome. Let's be honest, seeing that brown HMRC envelope on your doormat can make your heart sink a bit, can it? Especially when it starts talking about untaxed interest. But please, don't worry. We've put this guide together with the experts at ProTax Accountant, one of the UK's most trusted accounting firms, to help turn that confusion into clarity. We're going to break down exactly what these letters mean, why you might have one, and the simple steps you need to take next.
Right, let's kick off with a number that should really make you sit up and pay attention. Over 200,000. That's how many fraud reports were made to HMRC in the last year alone. Now, why should you care? Because scammers are getting incredibly clever, and they love to disguise their attacks as official-looking tax letters about things just like savings interest. So before we even get into the tax side of things, your first job is to be absolutely 100% sure the letter you're holding is actually real.
You know the feeling. Your heart does a little jump when you see that envelope with the HMRC logo. You open it up, you see the words untaxed interest, and it's so easy for your mind to start racing. But honestly, there is no need to panic. By the end of this chat, you'll have a crystal clear understanding of what's going on and a solid plan for what to do next. Okay, so your very first check has nothing to do with tax at all. It's all about authenticity. Is this letter the real deal? You see, scammers are absolute masters of creating panic, and they're counting on you to act before you have a proper chance to think. We're going to make sure that doesn't happen to you.
So, how can you actually spot a fake? Well, it's probably easier than you think. Scammers rely on you being flustered and rushing to do something. But if you just take a moment, take a breath, and look for a few simple clues, the fake letters often fall apart pretty quickly. Let's look at exactly what to watch out for.
Right, these are the 4 classic red flags of a scam, and they are dead giveaways if you know what to look for. First up, spelling and grammar. HMRC is a massive government department. They've got people who check this stuff. Scammers? Not so much. A simple typo can be your first clue. Second, check the tone. If it sounds urgent or threatening or demands immediate payment, be very suspicious. HMRC's first contact is formal, not frantic. Third, and this is a big one, any request to update your bank details is a huge alarm bell. HMRC just won't ask for this in an unexpected letter. And finally, just look at it. Does the logo look a bit blurry? Does the paper feel cheap? Trust your gut.
And this quote just brilliantly shows how clever these scammers can be. Steve Collins is talking about a scam where letters ask for a small, plausible-sounding payment. The amount is low enough, maybe £100 or so, that a lot of people just think, oh, I'll just pay it to avoid any hassle. They pay up without ever realizing they've been tricked. It's a really sneaky and, you have to admit, very effective tactic.
So here is the single most important pro tip. If you have any doubt at all, do not, I repeat, do not use the phone number or the website link that's printed in the letter. That'll just take you to another part of their scam. The only safe way to check is to open a new browser window, go directly to the official gov.uk website yourself, and find the real contact details for HMRC there. That is your only source of truth.
Okay, so you've done your checks and you're confident the letter is genuine. Now we can get into the tax itself. Why on earth did you get this letter in the first place? Well, it all really goes back to a major rule change that happened in 2016. Before then, tax on most savings interest was just taken off automatically by your bank. Now, the responsibility is on you to declare it.
The key to unlocking all of this is something called the Personal Savings Allowance, or PSA for short. The easiest way to think about it is like a tax-free bucket for the interest you earn each year. And this doesn't just cover dedicated savings accounts. It can also include interest from your current accounts, government bonds, and even things like peer-to-peer lending.
Now, how big your tax-free bucket is depends entirely on how much you earn. As you can see here, for the 2025-26 tax year, if you're a basic rate taxpayer, you get a pretty generous £1,000 allowance. But, and this is the part that catches so many people out, if you're a higher rate taxpayer, that allowance gets slashed in half, down to just £500. And if you're an additional rate taxpayer, it's gone. You get zero. This little detail is absolutely crucial and can be the difference between owing nothing and owing hundreds. Here's another common mix-up we really need to clear up. The Personal Savings Allowance is totally separate from your main personal allowance. Your personal allowance, that's the £12,570 for most people, is for your main income, like your salary. The PSA is an extra tax-free allowance just for your savings interest. They are two completely different pots.
Right, stay with me because this next point is absolutely crucial. You must not assume the numbers in an HMRC letter are correct.
I'm going to say that again. Do not assume the numbers are correct. HMRC gets its data from banks and building societies, but the figure they send you is often just an automated estimate. And at the end of the day, the responsibility for getting it right is yours.
So why would an official figure from HMRC be wrong? It's a great question, because asking it shifts your mindset from being someone who just has to pay a bill to someone who's actively checking the facts. And there are actually several very common reasons why their numbers might not match yours. Let's make this simple. And here are the usual suspects. They might be using last year's data, which is no good if your savings have changed. A classic error is with joint accounts. HMRC gets the total interest from the bank, but how would they know to split it 50-50 between you and your partner? We also see tax-free ISA interest getting included by mistake, or believe it or not, your data can even get scrambled with someone else's. Any one of these common glitches can lead to a completely wrong tax demand.
So you've confirmed the letter is real, but you've got a strong suspicion the numbers are wrong. What now? Don't worry, there's a very clear and simple plan you can follow to take control of the situation and get it all sorted out. Let's break it down into easy steps.
Here it is, your simple 3-step plan. First, review. That means gathering all your bank statements for the tax year they're asking about. A little pro tip here, don't just look at the year-end summary. Check the actual dates the interest was paid into your account. Second, compare. Get your calculator out, methodically add up the interest from all your accounts, and compare your total to HMRC's figure. And third, contact. If your numbers don't match, you need to get in touch with HMRC and give them the correct information.
Let's make this real with an example. Meet Jameson, a freelance designer. He got a letter completely out of the blue, claiming he had over £5,000 in undeclared interest. He was looking at a hefty tax bill plus penalties, and, like most people would be, he felt totally lost and didn't have a clue where to even start.
So what happened? Well, Jameson got some expert help. His advisors contacted HMRC for him, they explained the situation honestly, and they provided all the correct figures. Because they were proactive, it showed cooperation, and that helped them negotiate his penalty right down from 20% to just 10%. They also arranged a payment plan he could actually manage. It just proves that facing the problem head-on always gets a better result than burying your head in the sand.
Okay, we have covered a lot of ground. We've looked at how to spot a scam, how the Personal Savings Allowance works, and exactly what to do if you get one of these letters. Now, let's pull all of this together into a few key takeaways that you can remember. You'll definitely want to hear this part.
So let's quickly recap the most important points. First, whatever you do, don't ignore the letter. It won't just go away. Second, your very first move is always to check if it's genuine. Third, get your head around your personal savings allowance. Is it £1,000, 500 quid, or zero? Fourth, check HMRC's numbers. Never ever just assume they're right. And finally, a really important deadline. If you've received a bill called a simple assessment, you only have 60 days to challenge it. So don't hang about.
Now, it's really important to remember that this is all for general guidance. Everyone's financial situation is different, so this is no substitute for getting professional advice that's tailored specifically to you and your circumstances.
If you're in a situation like Jameson's and you just want the stress and confusion to stop, the team at ProTax Accountant are absolute experts in this area. They deal with these cases day in, day out. For a completely confidential and expert review of your situation, just get in touch with them directly using the details you see on the screen.
And for more easy-to-follow guides just like this one, helping you stay on top of your finances and taxes, make sure you pop over to the ProTax Accountant YouTube channel and hit that subscribe button. It's packed with genuinely useful information. So I'll leave you with this final thought. What's one small, manageable step you can take this week to get some clarity on your own savings interest? Maybe it's just digging out last year's bank statements from that drawer. Or maybe it's doing a quick online check of your personal savings allowance. Whatever it is, taking that first small step is everything. Thanks for watching.